All right. Well, welcome to Zoomed In on Real Estate. I am Ryan Castle and the CEO of the Cape Cod and Islands Association of Realtors. And we always love having these monthly ability to update you guys, but also bringing guests to talk about it. We got some great ones today. As always, this is presented by the Cooperative Bank Cape Cod, and we really appreciate them making Zoomed In on Real Estate available. And we've actually got Charlotte Green from there today to talk about the mortgage markets because that's what a lot of people want to hear. And then we've got two other great guests, two of probably the biggest real estate brokerage power players in Massachusetts, talking about what they're seeing in their Boston markets, because I think that's really important. You guys know what's going on in the Cape, you see what's going on in the Cape, but most of your clients are coming from those Boston markets. And so we've got David McCarthy and Larry Rideout, two brokerage leaders in the Boston area, coming to talk to you today about what they see in the Boston markets, and then also what they're seeing, what they're thinking about from the brokerage landscape moving forward, and where they see this industry going. So I'm really interested. I always enjoy talking to the both of them, and so I hope you guys enjoy what they have to say today. Couple updates for you guys. Well, obviously, since you're on here, you've logged in and got access to our new platform called Pearl, which is a professional education and real estate learning platform. It's where all our online and even in-person classes are being held now, and all that data around what you're signed up for, what you can get for training is going to be living in there. And coming soon in the first year, we'll be in the first quarter of next year, we'll be launching on-demand classes within there as well. In addition to the live Zoom and our in-person, all your information for in-person flows in there as well. So it's a comprehensive platform for you to know what you've taken, and also for you to find new things to take, whether they're recorded videos or live webinars and trainings. So you sign up with us, and then that's where you go to access your class. We encourage you to make sure you go in and put in your license number in there as well, so that we have up-to-date records in Pearl for that as well. So if you need any help with that, call our office if you're having trouble accessing it at all. So please do that. And for our upcoming online webinar schedule, live webinars coming up, is we've got lead paint this week, which is obviously a really important one as always. We've got Chapter 93A on November 30th. We'll talk a little more about that at home with diversity certification course on December 8th. We are having the Code of Ethics training on December 14th, and dual agency on December 20th. And so that will round out our online webinar education schedule for the rest of this year. So if you're, due for license renewal in the first quarter next year, make sure you get on some of these. You can get probably all of your credits you need online through the rest of this year, if you need that for your license renewal, without having to take some of the painful on-demand classes. Also in-person CE on December 15th, we have the residential appraisal process and financing. So those are two in-person classes that'll be held the rest of this year, our last in-person for this year. As we talked about earlier, December 8th and 9th is at home with diversity certification for the National Association of Realtors. This does count as our new fair housing requirement that we require all members to have on the Code of Ethics cycle, which will run through 2 more years of this cycle through 2024. So you got to get your certification now, and you're good on that fair housing requirement. There is a one-time application fee after you take the course to get your at home with diversity certification, but through NAR's ability, they've lowered that to $40 from $75 if you apply through December 31st. So that $40, if you apply you get $35 savings. So if you take this and then go get your certification, that saves you $35 to do that now. We also have a webinar with a new product we recently launched to you guys called Rent Spree for those that do year-round rentals. This is tenant screening made easy. It's application, tenant screening, everything, and they've designed it in a way to be compatible with Massachusetts rental laws. So please, if you're interested, if you do either own year-round rentals or just occasionally help help your clients with year-round rentals, for those that we do have, we encourage you to take a look at Rent Spree from the standpoint of rent collection, tenant application screening, everything you need to manage that year-round rental is now available to you through Rent Spree. We also have our Welcome Home Gift Basket Drive going on, which runs October through December, where we ask you to collect household goods, brand new household goods that we can deliver to those getting housing, being placed from homelessness to housing. Because when someone gets placed from homelessness into a housing situation, they have no kind of household goods, toothbrushes, things like that, so you can connect with Pat Pry on our staff or anyone on the community engagement committee to find out more. There's also links that I'm sure my staff's sharing out right now because they're phenomenal at what they do. If you can collect them in your office, you can get what we call the laundry baskets to collect them in. You can connect with our staff and we can get those to you as well. But we hope you're doing that. We've done this now for, gosh, I think we started this the first year I was here, so like 9 years ago, and we've been doing it ever since, working with the Housing Assistance Corporation on this gift basket drive, and it just keeps growing every year based on the generosity of everyone here. So really thank you guys for that. And then the last thing I want to touch on before we get into these others is I've talked about them ad nauseum, whether it was at our fall town meeting webinar or our other zoomed in on real estates, but I'll go in a little deeper now because they finally put out their actual draft regulations after sharing a draft with us or with the Association of Realtors early on. But Department of Environmental Protection has proposed 2 new regulations. Basically one creating a new watershed permit and the other changing Title V regulations. And they kind of work in tandem. So I'll explain that a little bit. So if you see the map here, this is where the areas would be affected, which is basically the natural resource areas, nitrogen sensitive areas. As of November 2022 would be in place to get this. So what these new regulations require is a town to get a watershed permit if town has this these nitrogen sensitive areas, which is essentially approval of their comprehensive wastewater management plan. And so there's a couple towns that have approval of their comprehensive wastewater management plan. Most of the towns are in process. Some towns have not started. But essentially this is DEP's way to try to mandate these towns get this watershed permit to have a comprehensive wastewater management plan to do this. So if a town moved forward and got their comprehensive wastewater management plan approved by DEP, they would be exempted out of these new Title V regulations. If a town failed to act, then the new Title V regulations would kick in, which would require within 5 years that every homeowner upgrade to an IA system, or at the time of sale, whichever would be sooner. So if you're going to try to sell within that 5 years, you would be required to upgrade. But if not within that 5-year period, you would be having to upgrade to an IA system and an innovative alternative septic system. There are 2 public meetings. One's tonight at 6 p.m. to 8 p.m. And we'll be getting an email out later today with a lot of this information to the whole membership and some of our talking points that we encourage you to share with DEP if you go to these public meetings. So one's tonight from 6 p.m. to 8 p.m. and another's tomorrow. I put 2 p.m. to 4 p.m. That's wrong. We'll correct it before we send out the membership. That's noon to 2 tomorrow. So we'll be our staff will be on those. Massachusetts Association Realtor staff's been on those. We've been working in tandem around put together thoughts and proposals along with our public policy committee and our board of directors. Our public policy committees have this on their agenda for the last couple meetings. Our board of directors have talked about this at the last couple meetings as well. This, just a backstory, this extends out of the lawsuit between the Conservation Law Foundation that sued the town of Mashpee and the town of Barnstable. you might remember we retained counsel in that lawsuit to try to intervene if necessary, but this is the proposed settlement between DEP and the Conservation Law Foundation is these new regulations. And so we've been monitoring this for 2 years now, and we've been tracking it. We've had several meetings with DEP on these regulations. Some of their regulations have changed based on our input, because DEP is starting to finally learn and look at the impact of housing affordability and availability on their regulations. And as they think about regulations, to think about that in the lens of the need on the Cape for housing affordability, and statewide, the need for housing affordability and availability. So some of our concerns that we thought about is that this places the burden on the homeowner if the town fails to act. So, one of the big things is, look, the burden maybe should be placed on the town, right? It's the town failure to get the wastewater management plan approved. It's the town's failure to do that. Why are you placing that financial burden on the homeowner for that failure of the town to act? Because we've taken this lens of, we want to try to get to a yes in this, because we know we need to improve clean water, our water quality on the Cape, but we also don't want to infringe on private property rights and put unnecessary burdens on homeowners. Another concern we have is if a town failed to get a watershed permit, and the homeowners would be required to upgrade. We don't see how a town like Barnstable or Falmouth or Mashpee, if you look at some of those more those towns where a lot of this falls in, has issues where the lack of installers, the lack of systems availability to be able to upgrade those systems within 5 years in all those areas. And so maybe the timeline should be extended out for that lack of infrastructure we have in this environment. Also, for years, environmentalists have said IA systems are not the solution for Cape Cod's water quality problem, but this seems to indicate that they're allowing IA to opt out of sewer. And environmentalists have said for years the way to solve Cape Cod's water quality problem is through more sewer, as through better management plans like that, and that IA systems as a whole is not a solution. So why are we going to put a burden on homeowners first? That's not the environmental solution. It seems like it's going to give ability for towns to kind of say, oh, we don't have to do anything, we can just make our homeowners, which we have no financial stake in portions of our town, not even the entire town, upgrade to IA systems. And so there's also some equity issues there. If you look at it, it's mostly the south side of the Cape that would be impacted and not the north side. And I think there are some real equity concerns there as well. And then also, the reason for Title V was always to help the homeowner, to ensure that health and safety of that home with a working septic system and things of that nature. And Title V was designed around the homeowner benefit. And nitrogen reduction, while is good, but it has no direct benefit to that homeowner who's buying that house or installing that system, right? Yet they are going to be saddled with the financial burden. Yet it has the community benefit, but the community has no tied to having to help fix this. And so while DEP will talk about, hey, here's the ways we could change financial incentives and have financial help to the homeowner, they're not in law, they're not available yet. And so the financial things need to go along with the regulations if you move that forward. So those are some things I think you should be talking about with that, to be talking about there. And so I would encourage you to take time to attend one of the two webinars, learn more, provide me feedback, give me a call with any thoughts on this. This is a moving target as we look to try to put our concerns together around this for our comments to DEP. And like I said, we've had a couple meetings already, and they've been really receptive to some of the comments and feedback we've given them. So that is my presentation, and I will stop sharing my screen, and I will bring in Charlotte Green of the Cooperative Bank of Cape Cod. Charlotte, are you there?
I am here, Ryan.
Awesome. All right, so we'll start with this. What everyone wants to know: how is that mortgage market today? I mean, so obviously we know for months that we've seen rising interest rates, but we've actually saw some fall in the last week or so.
Spoiler alert, Ryan. Spoiler alert.
Sorry. I just wanted to set that up, right? So maybe buyers should go reach back out and see if they have a lower rate today, right?
Exactly. It's been a wild ride in the mortgage world. Rates have been all over the place, and we've seen some great movement in the last couple of weeks. So I'm going to jump into that and start sharing my screen with a quick presentation. Oh, I'm disabled to share. So no graphs for you
Get that
guys.
fixed real quick.
Yeah, you should be able to now, Charlotte.
Alrighty, thank you. Alrighty. So I'm Charlotte Green. I'm the residential mortgage sales manager with the Cooperative Bank of Cape Cod, and I'm sharing my wrong screen, aren't I? You see a whale, right? I'm going to share screen too. Sorry, guys. Technology can be tough even for millennials. So I've been working in the mortgage world on Cape Cod for over a decade. So I've seen the highs, the lows, the good, the bad, the ugly. And we're in a really, really interesting time right now. I'm going to start by just plugging the benefits of local banks who are a great benefit for your buyers and your sellers. We've got local underwriting, local vendors with our appraisers and closing attorneys, which means we can help overcome those funky nuances of Cape Cod that the big boxes might have trouble with, be it strange income, variable, unemployment, etc. Property types, failed Title V, orders of conditions for that marshland someone cleared 10 years ago and hasn't replanted. It helps get our buyers to the closing quickly, effectively, and smoothly. And that's great for the seller as well, because heaven forbid a buyer's financing fall through midstream, that property goes back on the market. You know, there can be adjustments to price in the wrong direction currently. That, and we reinvest in the community we all love, such as sponsoring things like this Zoomed In on Real Estate, hosting and sponsoring other nonprofit initiatives, and a lot with the housing advocacy for our affordability prices. So don't just shop local, free Christmas presents. All right, now getting into the good stuff with mortgage rates.
Charlotte, just to jump in quick, we're not seeing your screen still. I don't know if I don't know if, just to let you know. I think you thought we were, but we're not.
I appreciate that. Please hold. Are we seeing it now?
No. I don't know.
All right. Oh. Bear with me while I troubleshoot. I'm sorry.
Yeah, that looks like something's happening.
Okay, great.
We see the whale now.
Okay. All right. Sharing. I'm just going to move my whale over, I guess. You know, I've done this how many times with you guys?
There we go.
There you go.
There we go.
Struggle. Okay,
Yep.
great. So here I've got a nice little graph of the mortgage rates looking back from 2017 all the way up to 2026. So what's exciting for me about this graph, looking at our blue index for the 30-year fixed rate mortgage, which is one of the more popular products out there for our buyers. Looking at 2022, this might have been a conservative projection, but it seems we are hopefully hitting our highs currently, or maybe seeing our way out of those record highs in the last 10, 15, 20 years for mortgage rates. So we were up above 7% 2 weeks ago. And as Ryan mentioned, last week there was a 50 basis points drop in interest rates. So what that means is about a half a point for your home buyers. And I'll get into what that means for payment a little further down the line. But that was a reaction to better than expected inflation numbers. And as the Fed continues to increase rates on the Fed funds rates to get a better handle on inflation, and as inflation cools, mortgage rates are projected to go down in the future as early as the end of 2023. And I'm keeping my fingers crossed for that and for our people who are buying homes now. So what does that mean for you all? It means it's still a great time for people to buy and sell homes. I'm going to just get into this meme that I love because, as I mentioned, I'm a millennial. I love memes. Interest rates have been really high, and people are jarred by that, hearing rates in the 3s, the 4s, for the past few years. Compare that to renting, you're saving 93% on your interest rate when you're buying a home versus renting a home. And there are a lot of really great benefits to homeownership that help people look forward. So sure, I don't love the sound of a 7% interest rate right now. You all might have seen this meme, you're marry the house, date the rate. If you find the right house, you're qualified and you can afford it, pop the question, make the offer, buy the house. As soon as rates come back down, buyers are able to refinance and save money on those rates. So let's say someone closed on a mortgage 3 weeks ago at a 7% interest rate. And they saw today rates are, wow, we're closer to 6.5%. I can get a slightly more competitive rate than what I had. There's no seasoning requirements to refinance, assuming you're not taking additional equity out of the home. So that 50 basis points, half an interest percent drop on a $600,000 loan amount would equate to a $200 monthly savings. That's pretty significant for a lot of our buyers out there. So that's something for people to keep in mind, especially looking out to 2023 when those rates are really expected to see much more downward movement. So looking back, I just want to take a 12-year look back. Rates have consistently gone up, gone down, and had some really wild fluctuations. So we've always had high markets followed by what we call refinance booms in the industry, where lots of folks are refinancing those higher interest rate mortgages that they used to buy the homes. That is always something that we like to educate our buyers on, and would encourage you all to educate your buyers that just because you're locked into that rate for 30 years when you're applying does not mean you have to stick with that mortgage for 30 years. There's also a huge benefit in owning a home for people's financial security and growing net worth. So this blue bar right here is net worth by house for homeowners. This green bar down here is for renters. And this only goes back to 2019. So there's going to be a really significant increase in that net worth with the housing equity with current home prices. So owning a home is a really, really great way to build equity for people. So if they can get into a home, find something in their price range and get that down payment together, it's a great option. And then for second home and investment buyers, you're seeing so much return on that investment that despite these interest rates, it is still a phenomenal time to buy a house. So we hear a lot too about housing bubble fears, and I want to talk about that in financial security. So looking through recessions over the past, which are indicated by these dark blue bars, the white shows us what housing has done and housing prices have done in that same time. There was obviously a significant drop during that 2008 housing crash, and I'm going to talk about that a little bit more as well, because people hearken the environment we're in now to where we were in 2008, and it's a completely different environment, I'm happy to say. Right, so why is the housing bubble not on the forefront? Our market is correcting versus collapsing, especially here on the Cape, and I'm going to leave that to the professionals who are going to be up next to talk maybe a little bit more about that correction. And Ryan, you've alluded to this in the past with a lot of your presentations, that with that rapid appreciation we've seen over the past few years, it's going to level out to more standard appreciation. Additionally, the Cape is a highly insulated market, and there's high demand for properties, be it investment homes, second homes, or primary residences. We know here and across the country, there's really a shortage and a demand for housing. That's being fueled by minimal new inventory coming on the market, speaking to new construction more so than existing homes being resold. Additionally, we have really strong underwriting guidelines since 2008. We did learn our lesson. So customers who are in mortgages now, even be it adjustable rate mortgages, are really, really well qualified buyers. So, or homeowners. So they're going to be able to afford that property long term. They also have significant equity in their homes, as I showed in that previous graph.
Well, not only that, Charlotte, and I want to point this out also. Realtor.com just came out with a study this week that showed the Cape was the 4th highest on average down payment over the last 2 years of any market in the country, meaning on average, we've been putting 25% down on homes. So, you know, they're not over leveraging for what they, you know, for what they're borrowing. So it's actually the 4th highest market for an average down payment in the country right now.
Wow, that's an amazing statistic, Ryan. Thank you for sharing. So we have really high equity ratios. And we also have really low delinquencies nationally. We're currently at 3.4%, which is the lowest since they started tracking this in the 1970s. And due to this massive equity people have in their homes, when people fall delinquent in their mortgage, their servicers, their lenders are working with them on loan workouts versus immediately triggering foreclosure. And these are all really great indicators for the housing market going forward. Also want to talk a bit about our next generation of buyers who are aging into this market. So we're going to have increased demand as millennials reach this peak home buying age, which is right around 34%. So we can see we've got a huge number of folks aging into that demographic in the very near future. Right here, these millennials are aging into home buying age, and they're going to be a really strong cohort with a lot of earning potential, and they're going to be able to be really nimble where they buy. There are a lot of hybrid remote opportunities, so we're financing for people, you know, all across the Cape and Massachusetts who are first-time home buyers working remotely, able to settle down in their dream location while still having a, you know, competitive high-paid job based in a more urban area. So that is my spiel on the mortgages.
Well, so Charlotte, what do you guys see? So y'all have been able to beat Fannie and Freddie rates for some time, but that gap's closing a little bit now. You want to talk about, you know, I mean, it still seems that y'all are portfolio on most things at this point, right?
Yes, we are portfolioing pretty much every single loan that we write at this point. And that's because we're a local bank. We've got portfolio funds from our depositors, and we are looking to lend them out so we can make a little bit more money. And, you know, we just on those funds, and, you know, taking a look at our market, our demographic, who we're trying to help. You know, we don't need to work with Fannie Freddie for those interest rates. So we are offering some slightly below market rates for our home buyers. We've got a primary purchase special at 5.875% with 10% down, and our jumbos are as low as 6% with 20% down. And our ARMs we have at and below 5% interest rate. So we've seen a huge trend over to those adjustable rate mortgages versus the 30-year fixed rate. Historically, people in those adjustables do beat the market over time. Something interesting we're seeing is Fannie and Freddie recently rolled out a change to their adjustment periods on their adjustable rate mortgages. So we're used to hearing, let's call it a 7-1 ARM, where a rate is fixed for 7 years and then adjusts every year after that. Now they're doing a 7-6 ARM. And when we're talking to people about this 7-6 ARM, or when they're asking about it, they're like, what's this rate, this loan that's fixed for 7 years and then, you know, it adjusts and then it's fixed for another 6 years? We have to raise the red flags and really correct that. And I think it's important information for everyone to share with their buyers. That 6 is 6 months, not 6 years. So that can be a really important factor for people when they're thinking about what those rates could do over time.
All right. Well, thank you very much, Charlotte, for that. And as always, people can reach out to you or any of your loan officers across the Cape and even off Cape at this point, right?
Yep. We've got 11 originators from P-Town all the way down to I'm quite close to the Bourne Bridge and beyond. And we lend all over Massachusetts, not just Cape Cod. And we recently dipped our toes into Florida. So any buyers you have looking down there, people trying to fly south before the snow sets in, please consider us for financing.
All right, thank you very much. And I want to introduce our main speakers for today and talk to them a little about what the Boston markets are doing and what they're seeing over in the Boston markets. So we've got Larry Rideout, who's the owner of Gibson Sotheby's Real Estate, and David McCarthy, who's got a couple of Keller Williams in the Boston area. And I'll let them both describe kind of their companies and their market areas. David, I'll let you kind of go first on. I'll also mention that we're happy to have you as the incoming president of the Massachusetts Association of Realtors for next year as well. So we appreciate you being a busy person, stepping up and doing the volunteer leadership role too.
Well, I appreciate that, Ryan. Thank you very much. As anyone knows, I think it's important to volunteer at the state level. It's a state or national or local level. It's a great opportunity to learn about your market and learn about the people in your area. And it's always been very beneficial to me whenever I've volunteered for any of these roles over the duration of my career. To answer your question about market, I have 3 franchises, one in the Back Bay with its main office in the Back Bay, then another one located in Newton Center, and then the third one located in Framingham on Route 9. So there are 3 franchises. Obviously, I have agents that cover a wide swath of market, but anywhere from that Boston West, some of the agents in the West in the Framingham office go far west of Worcester. So we cover a wide swath in the market.
And then Larry, how about you guys?
Yeah, we have presently 24 offices. We cover markets. I say generally Eastern Massachusetts is kind of what it is. David kind of goes a little further west than I do, but we do go further south, I think, than he does. So it's kind of like the two of us see the state in a pretty obvious way. And
which is exactly why I have y'all here, because it kind of complements each other. You got to get the whole state together.
Yeah, I was wondering why you had Mr. President on with me, but I feel much better now about that.
And y'all too, I'll know, are very competitive, so there might be some jabs between the two of y'all today. So I'll just say that for people that might not understand that.
We have good collegiate jabs at each other. And obviously, Ryan, it was great spending some time with you and Marissa down and Laura and Annie down in Orlando at the NAR meetings.
Yeah, and I'd like to compliment you. Your MLS is so good for our agents, and I know it's good for all the agents down there. And you're informative, you're involved, and I also like that you're not afraid to call us on the carpet if you have to. And that's a big step for everybody.
All right. Well, thank you guys very much. So David, I'll start with you. If you want to start in the city and move out, but what are you seeing in the market? Are you seeing the same thing across, from Back Bay all the way out to Worcester, or is it pockets of stuff? And what have you how are you talking about the market at this point?
So I would absolutely say that there is no consistency in the market from town to town or neighborhood to neighborhood within communities. There really isn't. Over the weekend, when we were in Orlando, I speak to my agents regardless of where I am. Had one agent tell me that he had 25 offers on a listing that he put on in Medford. Those are the numbers that we were hearing before. Did he list it really aggressively? I wouldn't say really. Did he list it appropriately for the market that we're in? Sure, but he did not expect 25 offers, and it ended up going significantly over asking. So. And then you've got other people who are putting properties on the market that you think are going to sell because they were in what felt like such high demand just months ago, and they're stalled. So we're seeing a variety of things, and I don't think that there is really any rhyme or reason to what's happening in any particular town, if that makes sense. I don't think we can say, oh, the market's down. I think what we absolutely can say is the number of sales are down. We're still seeing over asking prices. We're still seeing some price appreciation, again, depending upon where you are. We're definitely seeing some decline in price, again, depending upon where you are. But the most important thing that I keep saying to my agents, and Larry and I do talk off camera, the lack of inventory is going to end up with a significantly drop in number of sales, which we're already experiencing, or we are experiencing through October sales numbers for the state. It's going to mean lack of income, lack of earnings for agents. And I think that's one of the things that we have to remind our agents to be a little bit more focused on. And then secondly, which is a big piece of what I talk to agents about all the time, our business is really a lead generation business. And that lead generation takes a wide variety of forms. Most of the time it comes from your sphere. So reach out to your sphere, stay in relationship with your sphere. The follow-up question that we always hear or ask ourselves is, when do we think it'll change? I don't see any significant change happening in the first half of 2023. Those of us that would just, and all of us had the opportunity to watch or listen to Dr. Yoon at NAR, he painted a reasonably good forecast for 2023, considering what we're all feeling right now. And I wouldn't disagree with him if everything stays where we are today, with interest rates, even if they stay where they are, meaning flat right now. People are still buying. I think if that makes sense, and I'll stop there if you have any comments of anything I've said so far.
Yeah. So also, David, I would ask you, so, you and I talk about this often. In the last 2 years, I think 2.5 years, the Cape's kind of led the state in the market, right? And the rest of the state kind of has been following the Cape. And it kind of feels like what you're saying is the same thing, right? The Cape saw a larger decline in sales earlier than the rest of the state. And now the rest of the state's kind of following suit because we ate up the inventory quicker, because we went on that rapid pace quicker than the rest of the state as well.
True.
It does feel that way. And I think we could say Cape or any second home market within the state.
Mm-hmm. And Larry, how about you? What are you seeing in your markets? Same thing as David, or a little bit different?
Well, I see I'm a glass half full guy, so I see everything in a kind of in a positive light, I guess. And maybe that's a Pollyanna thought, but that's how I do it. But my markets are, I was fortunate enough to acquire on the Cape and fortunate enough to acquire in the Metro West marketplace. And both of those markets during COVID were where everyone escaped to. So we saw the spike in prices and the activity increase in both of those markets, and watched my Boston and Cambridge market disappear. So what's happened is, the adjustment in the Metro West and the Cape will probably be a little more dramatic in terms of the pricing and that sort of thing. But I really believe that today there was good news in the marketplace. Inflation didn't go up as high as they had anticipated. So that may be a precursor to the Fed dealing with the interest rates a little differently, and differently by meaning either not going up or not going up as much. So we have, for me, there's some light at the end of the tunnel here, where if this inflationary peak has hit peak and started backing up, the rates are going to move down, and they're not going to move down to 2 and 3 again. And that's where I guess my concern, when you talk about what's your concern in the marketplace, is for my agents. Much of what David said, many of our agents have not been in a market that shifted. So they're going to have to, they and the people like myself and David, who are dinosaurs, have to remember what we used to do back when it was a real marketplace, and you had to be sharp on negotiations and pricing, financing, home inspection, closing. Those things are now very, very important in terms of what you use out there in the field. So I think the buyer demand is still high. I know that some have stepped back because of the rates and the lower price points. Even in Boston, I can tell you 600,000-700,000 in Somerville isn't moving, which is an indicator to me that lower market is being really impacted. The high-end market is still moving because they're not so tied into the interest rates. And something that you said, Ryan, about the 25% down on the Cape, your market is actually very in tune with that type of a marketplace. People going down there aren't struggling to make that first home buy. They're buying something that's a luxury, something that they can move into. So your market may not, our market, not just your market, but our market may not feel the impact as greatly. We're all going to feel it. The shift is here, and we're going to deal with it. But the reality is, we have to remember every market is a micro market. My Boston market is slowed and slowing. I was in Arlington yesterday at my Arlington meeting. They can't keep anything on the market, So it's almost like you have to look specific markets. And I was glancing through the Cape Cod numbers, and I see that Provincetown, Truro, Wellfleet are probably having a struggle because there was such a dramatic increase down there. They're probably feeling more of it than any of the other markets that you have on the Cape. So it's almost like you have to look at micro markets, and every agent has to think about where they are when they're talking to the sellers. And there's an adage, location, location, location. and that's been in real estate forever. Well, we've changed it in our company to communicate. Everyone's going to have to start talking to their sellers and buyers on a very, very frequent basis, and be the steady hand and be the confident person, and talk about the facts. Don't sugarcoat it, but talk the facts, so that a seller's never sitting out there wondering why my property isn't selling. There's got to be communication. And so I guess we all have to make a mental adjustment. The last couple of years have been insane. It's, all you did was write an offer generally and then wait for something to happen. We're just going to have to, we're calling this a professionals market, and that's what's going to happen. The professionals will do fine in a down market. People that aren't adjusting or getting used to it are going to have a challenge. And that's where the leadership, management, owners, we need to be stepping up and taking care of our agents and helping them stay abreast of what's needed to get a deal done. Because the market's going to be the market. If you're going to stay in this thing for 30 years, you're going to see all kinds of changes, and you have to be in tune with everything and keep up with it.
And one thing that I've talked to a lot of agents, brokers in our market about that's affected by the Boston market is our market is so affected by what's happening in that Metro West and Boston market, right? And so one thing that we saw during that 2.5 year run was a lot of either HELOCs or cash out refis to then bring the cash down. And you're not going to see that in this market. So, it's going to be interesting on how the buyers are coming down. Are they coming down without that cash, or are they doing it pulling it from elsewhere? Because they're not necessarily going to take those higher interest rates on those HELOCs or that cash out refi to come out down here with that cash. So maybe they're going to have to take more mortgages out down on the Cape, which then maybe that mortgage rate might be impacted a little bit more on their buying power.
And if you go to the local markets, like I heard about this morning, you can negotiate pretty fair rates as far as I can see. So there's still the opportunity down there. It's just, we're all gonna have to work a little harder to make it work.
What, David, I mean, so y'all talked about neighborhood by neighborhood, town by town different. You talked to an agent in Medford, and Larry mentioned Arlington, can you be on the market? Where are those hotter markets in that Boston to Metro West to any of that area? Where are those hotter markets that's just hard to keep anything, where is it, or is it so property specific?
It definitely is property. It definitely is property specific. I mean, would be silly to paint a broad brush, but I would agree with what Larry just said about Arlington. And I know you guys all know the maps, but Medford and Arlington are pretty close. So, those markets still are pretty good, but you could find a property in Medford that hasn't sold, and you might be questioning why. So it's not like everything is flying off the shelves in those towns, but the inventory is still, or the market still has some legs in those areas. I would say for me, the other market that I not hearing agents and the numbers are proving to be accurate is the boroughs. What we just say, the boroughs, the North Borough, West Borough, marketplace, South Borough marketplace, that those are still strong. And again, for them, that becomes value. You're getting better value there than you are in the Natick, Framingham area when you go just that much further west. I think one of the things, if I could switch gears a little bit, Ryan, and just make a comment on, is that one of the things we haven't, and we heard of this discussion at NAR, and we've been having it locally for a little bit, is how many of the buyers that have bought in the last few years during COVID aren't going to move in the next 10 years because they bought a home that they've been dying to buy, not literally, obviously, but you're excited to buy with a very good interest rate, an exceptionally low interest rate now, and they won't look to move in the next 5, 6, 7, 10 years. So the consumer that bought that 3-bedroom home might look to put an addition on it versus move. So are we in a potentially extended period of lesser sales, or have we just returned to what we had in pre-19 volume of sales?
Yeah, I mean, and
feels like we've returned to a 19 volume of sales, and we just had a robust market during 2021 and the first half of 22.
Right, but the Cape marketplace, we're still a third of the listings we had in 19. So you're still having that issue. But I think you're absolutely right. So we've talked, I think Jessica lots of NARs talked about this a lot, that traditionally the rule of thumb was always, homeowners going to on average turn over their house in every 7 years.
Yeah.
In the mid 2000 teens, it got up to 10, and during COVID, it's like up to 12. And is that number just going to keep rising? And you're end up in, homeowners on average staying in their house 14, 15, 16 years. And then what is that long-term impact on the inventory and the number of sales a year? Absolutely.
Yeah, it's just a good question to be asking ourselves of what can we do to help maybe alleviate that or create, opportunities for people.
And with the millennials, it won't be a lack of buyers. It's going to be a lack of inventory or a challenge of inventory for moving forward. But I hope, there's some resolution. The new construction, people are kind of, we in Arlington, I'll refer to that again. There was a builder that just he put foundations in, and now he just capped it off, and he's done. He's going to wait to see what happens. And unfortunately, that's not a good sign for us, because the new construction's got to keep moving for us. So I'm hoping everybody doesn't take that sort of an attitude and just say, let's wait, because it'll be more and more challenging for us.
Well, we're seeing that all over the country, as I told my colleagues, right? Even the bigger builders in the Southwest and the South, where you have large tracts and you're doing home building, they're offering huge incentives in some areas. I've heard, Lennar's doing like $75,000 incentives to buy right now, and really doing their own financing at below Fannie rates and everything else. And so you're seeing that all over, them just kind of get rid of what they have and see where this goes. And I think that's probably the most hurtful thing to the economy, is everyone just sitting back and waiting, right?
Yeah, it certainly feels like
it's like a self-fulfilling prophecy there.
Yeah, but we're still, our volume of sale. I think what mentally has happened to so many people is we had such a robust market, but we've returned to 2019 and prior with the volume of sales, and that was still a very good market that we were in. So it's not like we've had this massive drop off from what I would refer to as just our kind of sort of normal market that we were experiencing. It's giving in some cases, as Larry pointed out, in the city, the downtown neighborhoods, more choices, and they're being a little bit pickier. They're having a better opportunity as a buyer. So sellers have to be more strategic and more real. If they really want to sell in the next 6 months, this is what they have to do. If they're just testing the market, they can test it, but they're just going to help somebody else sell their home. That type of approach. I really don't believe that there is any rhyme or reason so easy to sum up the market, as much as it's neighborhood specific or community specific, and having a professional that knows that market is the best thing that they can do.
Larry?
Yeah, no, it's just, for me, it's the positive mindset. We just have to, we can't control what's happening in the market. We have to deal with it and react in a positive manner. And in Boston, David's point, there's more inventory. Well, guess what? Now people have a choice. And that's not a bad thing, because that brings the prices down that they have dramatically increased. One of the things that I'm forewarning everyone is, the media loves the negativity. They just love it. That headline is always pounding you in the forehead. You have to kind of look beyond that. And when January comes, it's going to be Armageddon. It's going to be the comparison of 2022 to 21. And how the world has dropped off and everything's wrong. We have to keep in perspective, to David's point and your point, 19, 20. We have to have our agents focus on where we were in what would have been a normal market, and not the numbers that you're going to see in January, that the world just collapsed and real estate's going under. You're going to compare it to an anomaly, a year that I would love to have again. I hope we have 10 more of them. But the reality is that it's a once in a lifetime kind of an anomaly, I assume. And we can't be sucked into the vortex of the negativity of that. We have to keep our heads about us, because our consumers, our clients and customers are looking for us to give them positive information, honest information, but positive information. And that's something that we all have to work on.
Well, Larry and David, both of you have been in real estate in Massachusetts for a while, not to age you guys. But
David's much older.
Have you ever seen, a comparison to a market we had over the last 2.5 years? Was there ever a time period where you're like, wow, that was a real run that was comparable?
For me, and I might be reaching back, but when I started in the business in '84, and there was a run then of the increase in prices were drastic. You know, it went from, and I'm dating myself obviously, but a ranch was 72,000. It ended up being 130,000. So, and it was an enormous increase. So that happened once in the 80s. But again, that was built on a false foundation of the banks. That's when all the banks closed in 90 and everything just went away. This market, our foundation is very strong. You know, the banks have thankfully required money down. Everybody has equity in, so there's no collapse coming. I just think the anomaly of the COVID and the interest rates, you know, that was just like the perfect storm that caused an amazing market for us. I mean, all of us, we all benefited from it. But we can't compare ourselves to that market continually. We have to move on and be real about what the market might look like moving forward. And frankly, I'll look back at 19 when I'm talking to my team and say, this is the numbers I want to compare us to. How are we doing compared to that? And guess what? We're still doing very well. And we need to, you know, keep that mindset.
Yeah, I would agree with that, absolutely. And in the city, Ryan, we did have a pretty good run up after the 09 period. We had a very good.
We remember seeing the 14, 15, 16, 30, 40, 50 offers on properties in the city, right? Yeah. You were getting that way, right?
Yeah, we experienced that, and when I first started in the business, I remember talking to, I shouldn't say first started, having been in the business a bit, I would talk to some of the brokers when we in the city, specifically, I'm going to say the South End, and you asked some of them, like, what made them move their offices from where they were to the South End? And I can remember two of them who I still to this day talk to reasonably frequently, and one of them said to me, David, I moved my office to the South End because we had a turn rate of 18 months. 18 months. So the 7-year thing just didn't last. That's why she opened her office there, because we were turning properties so quickly, because people were buying the 1-bedroom, then going to the 2-bedroom, then sometimes going to the 3-bedroom, and then leaving the city back then. So we were able to upsell someone very quickly. It was a remarkable thing that we saw specifically in those neighborhoods back then. I don't think any neighborhood ever had a turn as quick as the South End had. That would be my guess. I've never looked at it statistically.
And for the city, David, I think you and I talked about during COVID, it was, you were seeing basically what we kind of saw in the Cape was the people moving out of the city into the suburbs in the Boston area were eventually going to be suburb buyers anyways, right? We weren't creating new suburb buyers, kind of like on Cape Cod. Most people that bought on Cape Cod were going to be Cape Cod buyers at some point. So I've really worried about this idea that, and we saw this in 09, 10, and 11 with the first time home buyer tax credit, this idea of borrowing buyers, right? We borrowed buyers in 9, 10, and 11 from 12, 13, 14 in that millennial age group kind of thing with that first time home buyer tax credit. COVID, I think we're going to look back and say all we did was borrow buyers a little bit, and that's why you're going to see some of those reduced sales. I don't know if that changed or if that was still kind of the perspective from the city standpoint. Is everyone that left the city was mostly going to leave the city anyways?
Yeah, it accelerated the process for sure.
Yeah, there's no question it did. The only thing that I would caveat that with is that, did they make the choice that they ultimately wanted when they moved, or did they feel under pressure to make that move at the time? That would be my only comment. But people make, decisions to move, or make the wrong decision on a house purchase and then change towns or something at a later date anyways. But I've seen a bit of that. I've seen that on the Cape as well, where people have said to me, well, we bought here, but we really wanted to be here. That was all we could get. So now we're going to look to flip.
And for those that haven't made it back into the city in a long time, or not a lot, what is going on there? I mean, a lot of the offices are now permanently remote or hybrid, and what kind of effect has that had in the city on real estate and on activity? I mean, David, you're in there almost every day, so.
I mean, Larry and I both are in the city all the time. I would say that I feel like the activity level is very strong, but not where it was but it's certainly not a ghost town, that's for sure. I mean, you're still waiting to get into certain restaurants, but it's like anything. You can anytime. Not every restaurant is wall to wall, but many of them are packed. Same thing with shopping. I feel like it's overstated how quote unquote how slow it is in the city, and I don't mean real estate market, but just slow in general of what it feels like. I'm in the city, not in probably 3 days a week and often on a weekend. And I would say that, it's not easy to find a parking space necessarily. I don't want to keep people from going in the city, but it's the city. It's an urban market.
All you have to do is drive in from a suburb in the morning and you sit for an hour in traffic. So
Right.
Boston,
The traffic's back. So the traffic's back. So people.
Yeah.
Yeah. So
Boston's vibrant. It's just, there's more, the pricing had to move down. The pricing is, and I believe the people, that graphic about the millennials, they're the ones that are going to want to live in the city. That's what happens to people of that age. So there's enough people out there that I think are going to backfill any issues that we have in Boston. But right now, Boston is just about price adjustments. If the agents are pricing things properly, and I don't mean they're doing it improperly, but they're staying with the marketplace and staying with what the pricing would be, there's activity. And that's really what happens. The mindset for the agent is to change the mindset of the seller who's stuck in my friend sold it 6 months ago for this. And that's a challenge that the agents have to deal with. And I feel bad for them because it's going to be ongoing for the next several months till they realize that, okay, this is the price now. And they can actually talk about that right at the table. Our industry just changes every so many years. I say there's no more painful market shift than the one you're sitting in. We can all talk about the rest of them. Yeah. But right now, the one we're sitting is the one everybody's feeling, and that's the one we need to address and be in front of.
And you talked about this earlier about, the price points that rely more heavily on mortgages and the entry level to just above entry level being the most price sensitive, and as the mortgage rates have gone up. David, we've had some questions about what the price point was on that 25 offers in Medford. Was that more entry level? Was it price?
I want to say it was 800. It was a home that needed no work to move in. They had done a lot of quote unquote, I'm going to say staging. I don't mean furniture staging, but painting and some cleaning up of the property. And if I remember correctly, it was around 800.
Yeah, because I think that's important, is those price points that are more mortgage reliant, right, are going to probably be the most affected in the mortgage price run up.
Yeah, I really don't think that there's any necessary rhyme or reason. That's the thing that I keep going back to, because as I talk to agents every day, every time I try to draw a conclusion, they give me a reason why I was wrong.
It's micro markets. It's micro markets. Yeah. Every market is just its own culture, its own personality.
And you just don't know the need. I mean, you just don't know the need of the buyer, or that's really wants to be in that particular neighborhood, and they'll still pay. I think there's a lot of buyers out there that waited, and now they're going to start jumping into the market, especially now that they feel like maybe inflation is under control and interest rates aren't going to be going up. I think there's a fair amount of people who'll come back into the market. Listen, our job is to market the home and negotiate a great deal on both sides of it, for our clients. And I think we're going to be very good at doing that in the short term. We just hit a little bump.
Sharpen up on your negotiation skills is really the thing. There's a lot of negotiation that has happened in every aspect of it. Sharpen up on it and communicate. This is going to be critical for everybody.
I think I think obviously negotiations has always been a significant piece of it. Larry and I would 100% agree on that. And I would agree with him on the communication. I don't think there's an opportunity for us any greater right now than to be constantly on top of both our buyers and our sellers on expectations.
Yeah, and shifting away from the market in the next couple of years, just to the industry in general and brokerage and agent world in general. Is there any trends you're watching with regularity that you're looking at, saying, hey, this is one I want to see how it plays out? I mean, because we saw, that iBuyer run up in the rest of the country, and now, the big stories are the Trouble Open Door and Redfin stopped iBuying and Zillow stopped iBuying, and the troubles Open Doors had. So that's kind of moved away. Even that power buyer trend around the country of the person backing the offers in cash are moving away as the market shifts, right? And what's come back tried and true is the role the agent has, the role the brokerage has, and especially more of the traditional agent and traditional brokerage role. Seems like that through every market that kind of outlasts everything. Do you see that being disrupted in the future?
I
Or
think two things Larry and I both do very well in these markets is we know the market and we know our agents, and we have a great culture within our offices. As a result of that, we will both do okay during any of these changes. I think right now agents are really leaning on the offices for sometimes a mental support, but it's just affirmations of what they're doing. And when I say affirmations of what they're doing, that everything's going to be okay, the market is going to do this. The market's going to be what it is, and we are just going to figure out how to play in the market that we're in at the moment. I would simply just add, we know that there's going to be a drop off in agent count. It's going to happen. We had a big run up nationally. I'm not saying necessarily locally. We had a huge run up nationally. We're going to see a drop off. It's just it, and I think that I think a lot of agents who are experienced and make the business look easy, and people think that they can jump in this business and make a big living easily, and it's not as easy as it seems sometimes.
And I think traditional offices are, we don't have all the noise around us, all the media noise and we're quitting this and technology is going to invest in, we just stay focused on the business. And I think that's probably the strongest point for us right now, is that's
the relationship.
Our job is our agents. Yeah, our job is, my clients are my agents, and that's what I take care of every day. And I've been doing it for 15 years. It isn't something new to us or new to my customer, my agents. So
It
it's
seems
just
like the relationships, either the brokerage relationships with their agents or the agents' relationships with their consumers, is what still has been tested over the years, and will that will continue in the future.
And we have to be forward looking. Technology is critical. We're in it. I feel we can compete with anybody in that regard. We just don't have, we're not, there's no investors giving me money to help me do this. I have to do it with my own funding, and that's the way I like it, the way I want to stay.
Yeah, agreed.
All right. Anything else we haven't touched on that you think is vital for people to be thinking about 2 to 3 years out?
I've been waiting for 10 years for David to compliment me, and he finally did. I feel much better about that.
That was his
And
jab
maybe
at me.
he'll
And
get
now
one
I'm going to
more,
go,
right?
geez, Larry, when we started this call, I thought you had a teleprompter in front of you. And little did I realize it's your Peloton. Go get on it.
That's not mine. The neighbor brings it in for the Zoom calls.
Yeah, no,
David, anything in the next 2 or 3 years that we haven't touched on that you think is going to maybe shape the future of the industry? I mean, let's be honest, and I'll say this, and this is a lot of talk in our meetings in Orlando, is the Missouri buyer agent commission case goes to trial in February. Mm-hmm. And so that will be over by the end of March, and that class action could potentially shape the future of the industry. So that's definitely, I think, the thing in 2023 to keep an eye on.
Well, there's no question we need to keep an eye on it. How it flushes out is the big question.
Yeah, absolutely.
What the resolution
But it's going to come to a head in 2023. So because that is hitting trial in February.
Right. And I do believe, I mean, if I had to say, I don't think a lot of people pay enough attention to that stuff. Advocacy is incredibly important in our industry. And, Larry is a phenomenal advocate for our profession as an RPAC major investor, platinum. I mean, he's committed to working with our local, state, and national legislatures to make sure that their regulations are in alignment with what we want as an industry. So that case, the fallout will be. I shouldn't say fallout. The
resolution of that case will determine a lot.
The outcome will shape us. Even if the outcome is in our favor, I think it's going to still shape us.
Yeah.
To some
extent.
extent.
We will adjust.
Yeah, absolutely.
All right. Well, thank you guys very much for the time today. We appreciate it. And like I said, I enjoy you too. I hope our members did too, because you guys are very insightful, and too, I rely on a lot for insight.
Thank you. Always good seeing all of you. Thank you.
Have a great day.
All right. Thank you. Bye.